Hi, and welcome back to our YouTube channel. I'm really excited today. We've got a new setup and we're both together. If you're new here, hi, I'm Antonia. I'm a licensed accountant and a small business owner. I own Abacus Jack with my business partner, Andy.
Hi, yeah, it's great to be here. I'm Andy Thomas. I'm the other director at Abacus Jack. And yeah, it's really exciting to be doing our first podcast with each other. And we're going to go through some sort of typical questions that we get asked by clients today and hopefully give you some useful insight.
Today we're going to be talking about working from home expenses because, like, I know you're exactly like me. When we have clients, we just get asked this all the time and we say, use this method, and they go, no, but I want to claim this, and this because I want to save more tax, and that's not strictly how it works. So in terms of who can claim, Andy, do you know what types of people can claim working from home expenses?
Yeah, I think if we try and break it down. So typically, if you're running a business, you're either operating as self-employed or sole trader, or you might be operating as a limited company director. And there's quite a lot of similarities in terms of how the process works. And I think, so you can claim what HMRC calls simplified expenses, where this is like a flat rate for working from home. So it's a kind of predetermined rate that you can calculate either annually or monthly, and it's designed to cover the costs of sort of running your house for working from home, so electric, heating, gas, that kind of thing. And the rates are set by HMRC each year up to a maximum. So I think that the current rate is set at a maximum of £26 a month that you can claim. And as I say, that's designed to cover the actual costs of working from home. You don't need to provide evidence or receipts for this method. So it's really convenient and it's a really easy way to actually get back some of those costs that you're incurring from working from home.
So the simplest way of doing it, which you just said around the simplified expenses where you don't need any paper records or receipts, is based on how many hours that you work from home. And the minimum that you can claim is £10 a month. But the maximum you can claim is £26 a month. And that's literally based on how many hours you spend working from home. A lot of people these days have hybrid roles, and that might mean that they spend 2 or 3 days in the office and 2 days at home, rather than 3 or 4 years ago where you were mostly based from home. And that's why HMRC have kind of updated the guidance now, so you can't just claim the full working from home expenses. So how does it work then if you have a limited company? Do they still get the simplified expenses as well?
Yeah, that's a really good question. They do. Again, HMRC have this concept of simplified expenses. So you can claim a flat rate for working from home. So if you're a limited company director, for example, then that £26 a month maximum allowable amount for working from home can basically go onto your company's accounts as an expense. And you can take that money as a payment to cover your costs at home, so your electric, your gas, your heating, that kind of thing. So it's very similar. It's a very simplified way of getting some recognition of the costs from working from home. It's just reported differently because it goes through your company's accounts rather than sort of personally.
Yeah. And I think it's interesting because when you start to look at a limited company, you have different types of people working in a limited company. So we have directors who can claim that working from home allowance based on the simplified rate, and that then goes through the company books. But if you're an employee and you're working from home and that company doesn't give you tax relief through your job, then you can claim that through your pay-as-you-earn code as well, so that you get some relief on that, which is a different process again. But I think what we see in limited companies is it gets a bit more complicated, because while you have a director working for the company, they have a salary taken from the company and they suffer some working from home expenses based on the costs that they suffer working from a home office space, or, for example, an area in the house. It might even just be a dining table, right? They don't just sit down in the office with a cup of tea and ready to go, do they? What other kind of things do they use that we need to think about?
Yeah, when we work from home, we typically have got to have things like a laptop, mobile phone, a desk, a light, sort of basic office equipment that you would take for granted in an office environment, but actually often need to replicate that at home. And it's really important to think about how we expense those items as business owners. I mean, typically, if you're furnishing a home office with the things I mentioned, so desk, chair, light, that's fine to claim those expenses through your business, because they are, and this is where HMRC's definition of wholly and exclusively comes in. So they are wholly and exclusively required for you to do your job. So they're required as business expenses. So that's no problem to expense those, and obviously you get the tax relief on those items. So your laptop, that's necessary for work, so that's expensable, and your sort of basic office furniture and equipment would fall into that category as well. Your mobile phone's a little bit different in the sense that if you are a limited company, then you can provide phones for your staff. That includes directors, it includes staff. HMRC will now allow a kind of small proportion of personal calls. They didn't used to, but they've kind of updated their thinking in line with the fact that we don't tend to itemize our bills anymore. So it's very difficult to know exactly which calls were made, which were business, which were personal. So the guidance is it should be in the company's name. The contract should be in the company's name, and you can provide that phone to the director or the employee as a business expense. But yeah, the kind of personal use should be fairly limited, but not impossible. Where you are a sole trader, for example, you can, it's a similar set of rules, but you have a bit more flexibility in terms of being able to say how much of something is a business expense, because you can disallow a proportion of an expense for personal use, for example.
Because you are the business.
You are the business, that's right. There's no concept of the company versus you. It's you as the individual. So you can put an expense through, but say actually only 40% of that is for business use.
Yeah. And that's because you can't have anything wholly and exclusively for you. It'd be a silly rule, wouldn't it?
It would, yes, it would.
So we've talked about the simplified expenses. The other way is if someone feels that isn't enough and it doesn't justify the cost that they suffer working from home, there is this thing called an actual cost method. And this is where it can get a little bit tricky. So if you have a room in the house and it's dedicated to your business and you want to work from that area, and you say, well, actually, I feel like £312 a year is not enough for the amount of gas, electricity costs and water costs that I suffer for being at home, then you can try and proportion it out. If you try to use that method, then what we need to do is look at the whole property and work out how many rooms there are in the house, right? And then we have to divide that up and then say what proportion of this home working space is a proportion of the house. Therefore, how much of the whole expense for the house can we apply as an expense to the business? Is there any risks by doing this for somebody who has a residential house?
Well, using the actual cost method is undoubtedly more complicated, but it's an allowable method, so we have to cover it. So yeah, as you rightly say, you work out how many usable rooms are in your house. Obviously, you don't include things like bathrooms or kitchen or utility room. You work out things like bedrooms or living spaces. Those are usable rooms that you could use for work. So let's say you've got 4 usable rooms in your house. You can then add up your household expenses, so your electricity, your gas, your internet, and you can say, well, I'm going to divide that by 4 because there's 4 usable rooms. I can obviously only use 1 room at a time, so I divide that cost by 4. But it's still not quite as simple as that, because you're not in those rooms 24 hours a day. You're actually still only working for a proportion of the week or the day. So you then divide that figure by the amount of time you're actually working. So you're kind of whittling it down. You're taking the actual bill that you pay, and then you're whittling it down based on the number of rooms and then the hours worked in those rooms. If that all sounds a bit complicated, well, it is. So that's why a lot of people just opt for the flat rate that we've mentioned. But the choice is there, and you can, as a business owner, make that choice. You'll have to supply your records. So you have to supply, evidence of your electricity, your gas bills in order to do that. So it's definitely more complicated, but it could be more beneficial in some instances.
And I think people forget that when you have this amount, that's not the amount of tax relief that you're going to get. That's just the amount of the expense. And then you get 19 to 25% tax relief on that for a limited company, depending on how much your tax is for the year. So be careful, like, how much effort that you put into understanding how much this cost is, because it might simply just be easier to go with the flat rate, and people can go crazy about it. Okay, so let's talk about when people take it a bit too far. And the risk of taking it too far, right, is that you have a whole business, and HMRC have a tendency, if they pick one thing, to keep picking. So if you get an inspection because you've overclaimed working from home allowances, you could open the door to them to start having a look at everything else in your business, and that could mean having to pull out all sorts of records to prove income and expenses in other areas that you've claimed. So you really have to bear that in mind. Can you think of any times where people have tried to stretch it a little bit too far?
I remember particularly during COVID, we used to get a lot of inquiries about people wanting to do things like garage conversions or garden office projects to sort of build that permanent office environment at home. And this one requires a lot of careful thought, really, because if you're actually physically changing the purpose of your home, so you've got a garage and you want to actually turn that into a business environment, into a proper office, people would want to naturally put that cost through their business, but we would advise a lot of caution in that particular example, because what you're doing is essentially creating a business premises in your home, and actually, in theory, you're then liable for business rates, for example. You'd also be liable for capital gains tax if you were to sell the home, because part of it has been for business use. There's a sort of simple way to cut through that, and that is to just apply some sensible logic to the project. You can, of course, convert a garage into a home office. That's absolutely fine. But don't put the full cost through the business. Don't put the cost of the builders, the materials, the labour, all that kind of expenditure through the business, because that's a physical change to your home, and it should remain a change to your home rather than a change to your business. So you absorb those costs personally, but then to kit out the room, as I said before, to buy things like the desks, the light, the chair, the computer, those fixtures and fittings, those kind of those types of expenses are allowable. Perhaps a good way to think about it is if you can pick up the contents of the room and you can move it to another office, if you moved house, for example, or perhaps if you went back to working, in a physical office, you can pick up those contents and take it with you. Those are the types of expenses that you can put through. The physical structure is much more difficult to put through as a business expense without causing those other implications.
Yeah. I remember I had one, and the client wanted to fully decorate the room, so put through the paint, the paneling, the custom furniture, which was then fitted into the walls of the home office, which was just crazy. And when we reviewed it at the end of the year, it was that whole premise of, can this be picked up and moved out of the room? Now, as a business owner, you can pay for that kind of stuff, but it's called, you do that through taking a salary, and a salary is tax deductible as well. So if you need to increase your salary and you can afford to do that because your business is profitable, then that's great. Take some more money, and then you can afford to pay for the things that you want to spend the money to make your home office look beautiful. There's also one I had where if you're in like a manufacturing kind of role and you actually have machines and stuff that make things and then you sell on Etsy, for example, you might actually need a studio at home, and you might need storage at home, and you might, physically use specific parts of your room for that kind of stuff. But one of my clients had a house where she bought it with a studio, and that studio was then used to manufacture the things that she sold. And then she moved house, we got an address update, and then lo and behold, an HMRC letter came 3 or 4 years later. Where's your capital gains tax? Where's our capital gains tax for this studio that you've sold? So people need to be aware of that as well, because if they have houses that come with studios, then they don't form the main part of main residence relief, which is what you get when you sell your house, which means that you don't suffer capital gains when you sell your main house.
Yeah.
I think probably one final point that we need to make is if you are claiming anything for any business or any sole trader, then what you need to do is keep good records. So how can somebody do that and stay organised throughout the year? Because if you get any inspections or anything, then you need good evidence, right?
Yeah, you certainly do. And when you read about claiming expenses on, for example, HMRC's guidance, you'll read time and time again this phrase, wholly and exclusively. So they tend to stray away from giving specific examples of what can be claimed and what can't, because actually, in fairness, that can be very different depending on what the business is. So, for example, if you are a photographer, you're absolutely going to want to put through your photography equipment, your camera equipment as part of your business. But if you are, for example, making software or a software developer, then you're going to have a much sort of different set of business expenses to that photographer. So HMRC don't necessarily give examples. They say that for an expense to be tax deductible through your business, it must be wholly and exclusively used within that business. So it must be relevant and used within that business. We advise clients to keep good records throughout the year. And one of the ways we can help them do this is to set them up with really good systems. So systems like Free Agent or Xero are online accountancy tools that you can use through your phone or through your laptop. And they very simply help you keep track of what's coming in and out of your business throughout the year. These systems connect to your bank account, so there's very little kind of manual data entry. The data is pulled from the bank. You can see what the transaction is. And it's often a case of just explaining to the software what that was. For example, you've bought a laptop for the business, you put that information in, and then the software's calculated that correctly in terms of how it's applied to your business. And if you get into those good habits, it just makes life a lot easier. It means your accountant can also see what you see. So when it comes to the end of the year, you get a really accurate picture of all the costs that have been going through the business, the benefit in terms of the tax relief, and you know that you're covered. So you know that you're up to date, you've kept the right records, and there'll be no issues if, for example, you had to provide those receipts or provide that evidence.
Yeah, and I think one of the biggest things I typically see day to day, month to month, is people buy stuff on Amazon and they don't give me the receipt, and then I have to chase them, and then that annoys them. It annoys me, so just don't do it. So ending on that one, anyway, positive note. Thanks for watching today. Really appreciate you spending the time with us. If that video helped you, please give us a like and subscribe to our channel for more business tips and advice. If you have any questions that you'd like us to answer in this setting, then drop us a comment and we'd be happy to help with that. But thanks so much for watching again, and we'll see you next time.
Thanks. See you next time.